Hi there, you're watching Market Cafe on ET Now with me Shreyansi Singh, and with me as always is Snehisha, and over the next 1 hour we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep an eye on and tell you what the brokerages are saying as well. But first up, let's take a look at what the Wall Street did and mixed moves largely coming in, Snehi.
Yeah, absolutely, Shanti. Mixed moves coming in, largely flattish moves coming in from Wall Street. Not much happening on that front, but well, one index to watch out for was the Dow Jones Industrial, because that average futures have sat near flat last line after the blue chip average clinched its longest winning streak since December. Those moves followed a muted and mixed day on Wall Street. The Dow ticked higher by nearly 0.1% and posted its fifth positive session, which marks its longest winning run going back to December last year. The S&P 500 also inched up about 0.1%. Nasdaq, however, slipped slightly, ended the day in the red, down 0.1%. So not much happening when it comes to the intraday trading session on Wall Street. Mixed moves coming in, but rather flat. Now, the 10-year US Treasury, that was the one to look out for, because that yield took a leg down in the session, providing upward momentum for stocks. But the market was hampered by a slide of more than 9% in Disney shares after the entertainment giant missed Wall Street's revenue expectation and offered a soft guidance. In after-hours trading, Lyft and Wynn Resorts added more than 6% and 2% respectively on the back of stronger than expected quarterly results. Reddit also was in focus because that has surged more than 14% following its first earnings report as a public company. Remember, this company has been recently listed on the bourses. Now, earnings remain top of the mind for investors heading into Wednesday, with Uber and Shopify slated to post results before the bell. After the bell, results include technology names like Airbnb, Instacart, and Bumble, in addition to the so-called meme stock AMC. So we'll be watching out for all of these results overnight as well. But nearly 85% of the S&P 500 corporations have already shared quarterly results this earnings season. Of those, approximately 80% have surpassed Wall Street expectations. This is according to FactSet. So good momentum when it comes to the earnings for this season, at least across Wall Street. Traders will also watch for economic data on wholesale inventories due this morning. Federal Reserve officials, including Vice Chair Philip Jefferson, Boston Fed President Susan Collins, and Fed Governor Lisa Cook are all expected to give remarks throughout the day. Remember, yesterday also we had some comments coming in from Bostic as well as Williams. So we just have to watch out what all of these people have to say about the Fed's inflation tackling policy and the road ahead when it comes to interest rates. But largely, this is the handover coming in from the US markets. But let's just focus and talk about what Europe is doing in solid gains coming across European markets. DAX is up almost 1.5%, FTSE up 1.2%, and the Pan-European Stock 600 index also saw an uptick of 5 points, 1.1% higher is where that index is as well. So flat moves from Wall Street, but remarkable moves coming in from the European markets. But Shreyansi, tell us what's happening with oil, and not much as well, isn't it?
Well, absolutely. And when you look at crude oil futures, you're not seeing much of a trade there. It was largely a muted session in that crude oil futures were little changed as the US moved to replenish the strategic petroleum reserve, and a potential ceasefire in Gaza remained uncertain. Now, the US Energy Department announced a bid for the purchase of 3.3 million barrels to help replenish the strategic petroleum reserve, lifting oil prices earlier in the session before ultimately closing lower. So ended the day nearly flat, and the oil market has grown tighter, with global inventories declining by 300,000 barrels per day so far this year, as OPEC Plus has largely adhered to production cuts, according to a report from the EIA. Now, when you look at price moves coming in, then when you look at WTI, that was down about 10 cents or 0.1% thereabout, and year to date, the contract has gained about 9%. When you look at Brent as well, that was down about 17 cents or 0.2%, and year to date, that contract as well has gained about 8%, and there remains significant uncertainty surrounding developments in the Middle East, which is something that the market is looking out for, which could still lead to sharp increase in oil prices. And this is, of course, according to the EIA. Now, when you look at what commentary we've seen coming in recently, Israeli Prime Minister Benjamin Netanyahu has said that the ceasefire proposal accepted by Hamas was very far from Israel's vital demands. Now, oil prices have briefly made moves higher on geopolitical risk in the Middle East for months before pulling back, as no major disruption to supplies has occurred. So the kind of moves that you've seen for US crude oil and Brent are both about 7% since their April highs when traders bid up prices on fears that I just talked about. So you've seen largely that geopolitical risk premium also waning off, and with a ceasefire remaining elusive or at least uncertain at this point, it remains to be seen what happens to oil prices from here on. But when you look at gold, then gold prices fell following gains in the previous session as traders remain focused on the prospects for interest rate cuts from the US Federal Reserve. So we'll see what happens with gold, but largely a downtick coming in for gold prices as well.
Well, absolutely. And with that, let's also take a look at all the important events that you need to be keeping on your radar this morning. And globally from the US, we have the wholesale inventories as well as the crude oil inventories numbers coming out today. Shifting focus back home from the earnings calendar, then from the Nifty pack, we have two companies coming out with their numbers today, Hero Moto as well as L&T. And you have Asian Paints and BPCL tomorrow as well. And on the 10th of May, you have Cipla and Tata Motors. But let's just focus and talk about the cues that we need to watch out for in today's trading session. And today is also the last day to buy shares of Laurus Labs to be eligible for their interim dividend in terms of corporate action. The Bajaj Consumer Board will meet to mull share buyback. Today is also the EGM of Vodafone Idea. So we'll be keeping a close eye on both of these counters as well. Now, in terms of the primary market, lots happening on that front as well. It's the last day to subscribe for the IPO of Indigene. That IPO will be closing today, and two IPOs opening today for subscription. That's TBO Tech as well as Aadhar Housing. Now, both of those IPOs will be opening for subscription today. And lock-in period is also going to be ending for a PJ Surendra Park Hotels. That stock is going to come out of lock-in, 6% equity coming out of lock-in for that as well. In terms of other news, then PM Modi will be campaigning in Telangana today, and we'll take a look at what he has to say. But well, yes, these are all the cues that you need to be watching out for closely in today's trading session.
Alright, well, there you have it. Those are the cues, but let's get you some headlines, top global headlines this morning. Everything you need to know from Apple's Let Loose event. The company has unveiled brand new versions of the iPad Air and Pro. CEO Tim Cook called it the biggest day for the iPad since introduction. Now remember, these are the first iPads that the company has released since October 2022, marking the longest stretch between updates since the launch. The tablet will come in two sizes, 11-inch and 13-inch, and the company is also advocating it as the thinnest ever at 5.1 millimeters thick. Let's go across to my colleague Sumita, who's standing by with more details. Sumita?
Yes, in fact, after a gap of 18 months, Apple has unveiled spanking new iPads and accessories. Well, let's first talk about the iPad Air. It's available in two sizes, uses AI and machine learning, and is 50% faster than the previous one. Then there was the iPad Pros as well, again available in two variants, 11 inches and 13-inch models. These are the thinnest ever Pros, lighter with advanced displays. But most importantly, these are powered by the next-gen Apple Silicon M4 that enables stunning precision and a phenomenal performance. Now, these are also aimed at gaming, but also have powerful AI capabilities with the new AI-centric apps like Final Cut Pro. In fact, the prices could be a little pocket-pinching for consumers, as the base model starts at 99,900 and goes all the way up to 2,29,900 rupees. But besides these, there were also accessories, including the Magic Keyboard and the improved new Apple Pencil Pro that works both with Air and Pro models. Now, clearly, Apple is trying to convince users how the iPad could be their best laptop replacement. After all, sales have been slumping, it's not been doing well, and it's not been able to disrupt the market, disrupt the segment as much as its other products have. Like the iPhone, for instance. iPad sales in the last quarter were down 17%, and some of it had to do with no iPad launch since 2022. But Apple is now trying to reverse that. It's hoping for sales to be revitalized, and even more so when CEO Tim Cook calls the event as quote-unquote the biggest day for iPads since its introduction.
Well, all right, Sumita, thanks for taking us through that. Shifting focus to some important commentary coming in from the Minneapolis Federal Reserve President Neil Kashkari. Inflation jitters are keeping Fed officials on the hook, and this could mean the central bank will need to hold borrowing costs steady for an extended period and may even be all here. Fed's approach continues to be data dependent, wherein Kashkari marks the need to keep a close watch on the labor market, where a marked turn to weakness could also justify a rate cut.
Alright, then let's put the spotlight on some earnings then. Reddit released its first quarterly results, and we've talked about this briefly, but let's delve a little deeper. And these were the first results since listing in March, Shares of the social networking platform soared 14% in after-hours trade. When you look at the revenue, that popped 48% on an annualized basis. And companies' ad revenues witnessed a surge too amid digital advertising companies spotting healthy growth, the likes of Meta, Amazon, and Google.
Meanwhile, Walt Disney's streaming entertainment unit posted its first ever profit 2 quarters ahead of schedule. Company's D2C division, that includes Disney Plus and Hulu, reported an income of $47 million versus a loss of $567 million last year. However, combined business for streaming with ESPN Plus lost $18 million. Share tumbled 9% post its results.
Alright then, let's move the spotlight back home, and Prime Minister Narendra Modi, in his interview with Times Network, claimed that India of today has opportunities that were unimaginable earlier. He also reminded voters of inflation during Indira Gandhi's time and claimed that the late PM Jawaharlal Nehru once blamed the Korea War for inflation. Now, the third phase of Lok Sabha polls concluded yesterday with 61% turnout according to latest data, and PM Modi also cast his vote yesterday in Ahmedabad. How will Modi's claims on employment and inflation influence voters and the outcome then? We caught up with Swaminathan Iyer, ET Now's consulting editor. Here's what we got. Listen in.
Inflation is a problem. Like Rahul Gandhi's UPA 2, inflation was very high then. That again was because world prices of food and oil shot up. Inflation has been a problem. It has, however, been coming down. But let's face it, the Reserve Bank still says we are so worried about inflation.
Alright, well, let's slip into a short break on that note, viewers. So when we come back, we'll take a look at how the Asian markets have opened up this morning. So you stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at some earnings that we had yesterday then. And when you look at Dr. Reddy's, that delivered a miss in Q4, a sequential decline in the company's global generic segment weighed on the performance. So when you look at the revenue, that came in, that was a marginal miss. Uptick of 12.5% year on year, but still a miss. When you look at net profit, then uptick of 36.4% year on year, but still the net profit was in line with estimates largely. EBITDA as well came in below estimates, even with an uptick of 13.6% on a year-on-year basis, and margins were largely below estimates as well. When you look at the word coming in from the management during the con call then, they highlighted that the EBITDA margin was seen at 25%, and this is inclusive of Revlimid. And when you look at the research and development, what they've talked about is that 8.5 to 9% of sales is what is going to be for next year. And that's the word coming in from the management about the research and development. Now, when you take a look at what they've said about China, they've said that China continues to grow in double digits in CC terms, in constant currency terms. And in terms of revenue synergies as well, what they've said is that revenue synergies from Nestle JV, they see those coming in from financial year 26 to financial year 27. So that's the word coming in on revenue synergies as well. In terms of region, of course, they've talked about North America, that's seen a year-on-year 29% uptick. When you look at India as well, 11% uptick coming in there as well. Lastly, when you look at the quarter-on-quarter decline, they've talked about how this is being attributed to the product mix changes as well as price erosion and forex impact coming in as well. And they also highlighted the managerial changes. Parag Agarwal will be retiring as CFO and MV Narasimhan will be elevated to CFO. So that's largely the word coming in from Dr. Reddy's as well as the earnings verdict for the counter.
Alright, well, let's also hear out from the management on the business strategy for their India business. Hear out the company's CEO, Reddys Israeli, and what he had to say.
Absolutely, we see that, and we are very, very happy about what we are now doing in India. We are continuing to invest behind our brands and to grow in double digit and likely to continue with that. In addition to that, you're going to see more and more tractions of deals. We are engaging many companies with our attempt to bring products that are better than the standard of care and to improve the standard of care in India. This is very important to us. One, we are adding value to the healthcare system. At the same time, it is a growth engine for our company. We always stated that we want to be top 5 in India, and this is a way to do that.
All right, we'll also take a look at what the brokerages have said when it comes to Dr. Reddy's Q4 performance. And we have a note coming in from JP Morgan this morning, and they've maintained an underweight rating on the stock, but have gone ahead and also cut the target by 20 rupees to 5,170 rupees per share from the earlier 5,190. They say that the US business has been softer than expected. Biosimilars are expected to drive growth only after FY27. And remember that recently they got into a joint venture with Nestle for their nutraceutical portfolio, and that Morgan Stanley believes that this, that JP Morgan believes that this JV will contribute to the overall business only by FY27, and as of now, they're seeing some limited visibility on the pipeline. So rather bearish note coming in from JP Morgan on Dr. Reddy's. We'll just have to see what the stock impact is of the company's Q4 performance as well as this brokerage note coming in.
Well, absolutely. So that's the word coming in from JP Morgan. But let's move on then. And the National Stock Exchange will conduct a special live trading session on May 18th in equity and equity derivative segments to check their preparedness to handle major disruption or failure at the primary site. Ankur Mishra is standing by with more details. Ankur?
Yes, it is going to be a working Saturday yet again on May 18 because the exchanges are going to conduct a test on disaster recovery. This has been done after the direction which has been given by the regulator to the exchanges that they need to prepare for disaster recovery side. While the first session will be conducted from 9:15 a.m. to 10 a.m. and this will be on the primary side. Now, and after that there will be switchover to disaster recovery site which will be from 11:30 a.m. to 12:30 p.m. This direction came a year before by the regulator, but now exchanges are implementing it because you would remember that on March 2 itself there was a similar kind of session which was conducted by the regulator, although there is no prescribed limit for exchanges to conduct this kind of test, but at least once in a quarter these kind of tests needs to be conducted by the exchanges for the preparedness, and this report will be finally submitted to the regulator, and upon satisfaction a final implementation can be done. So you may see these kind of testing more often, in at least once in a quarter by the exchanges in near future, and the stock exchanges will work on Saturday, at least on 18th of May this time.
Ankur, let's just hope it is at least and for the last time this year on the 18th of May. It's the last Saturday that we have to work for, at least when it comes to disaster recovery side. And let's hope NSE has that check and balance in place. But let's move on then. And the Supreme Court yesterday took a firm stand on the issue of misleading advertisements, saying celebrities and social media influencers are equally liable if the commercial for the product or service featuring them is found to be deceptive. Sumit Chaturvedi, my colleague, is here with all of those details. Good morning, Sumit. Take it away.
Well, continuing hearings in Supreme Court in Patanjali's misleading case, Supreme Court pulled up Indian Medical Association and celebrities and social media influencers as they have impact on products they in a way propagate or endorse. Supreme Court said that these people must use the products on their own, and without that they cannot endorse the products. Also in Indian Medical Association's case, the Supreme Court pulled up IMA saying that why did their president give an interview on the eve of hearing last time? So that was something which was not found in favor with Supreme Court. The Apex Court also ordered that the broadcaster, TV channel broadcaster, will now have to file a self-declaration form, and procedure will be needed to encourage that complaints or complainants should come forward and lodge complaints. Consumer Affairs Ministry will also have to have some kind of devise some kind of mechanism so that overall there is affidavit on misleading advertisements case. So not just one Patanjali advertisements in this case, but other parties also came under attack by Supreme Court, including Indian Medical Association and influencers and other endorsers.
All right, thanks so much for that update. Let's move on then. And Baba Kalyani-led group has challenged legal suit filed by Hiremat family. Baba Kalyani, MD of Bharat Forge, has stated that his nephew Sameer Jay Hiremat and niece Pallavi Swadi have no right to seek partition of the Kalyani Hindu undivided family's assets as they're not part of it under current law. Now, my colleague Anurag Joshi is standing by with more details on this. Anurag? Tell you what, let's get a move on then. And it was a weak Q4 for United Breweries. When you look at the profit, then that dipped 5% on a quarter-on-quarter basis. And when you look at higher ad expenses, they were also coming in as a key drag as well. Now, Ashisha is joining in with all the number crunching. Ashisha, tell us a little more about the earnings fine print then.
Well, yes, for United Breweries this time around, revenues have come in better than what the street was working with, but margins have been weaker than what the street was working with, and even on a sequential basis, margins have contracted. So if you look at the numbers, revenues have come in at about 1972 crores, which is a solid uptick of 17% on a sequential basis, but margins have come in at 6.7% versus street estimates of about 9%. Remember, in the third quarter, company had reported margins at 8%, so even on a sequential basis, margins have contracted. As far as volumes are concerned, volume growth has been solid at about 11% on a sequential basis, and that is largely led by the premium segment, which grew by about 21% on a year-on-year basis. Gross margins have contracted by about 230 basis points QOQ, and that is largely on account of change in state mix and new bottle infusion that the company did in the quarter gone by. As a result of which EBITDA margins have contracted, and another reason for contraction of EBITDA margins is higher advertisement and promotion expenses and higher employee costs in the quarter gone by. As far as management commentary is concerned, that too is on the cautious side. Management said that raw material pricing inflationary trends have eased out a tad bit in the fourth quarter, but prices continue to remain volatile, so management commentary is also quite cautious. Analysts believe that as a result of the weak set of numbers that the company has reported, perhaps we could see some EPS estimates cuts for the coming years. And scorching heat in the near term is a positive, but it will be offset by election impact in the current quarter. So all in all, it is a weak set. Brokerages too are not very positive about it, and margins have contracted much more than what the street was working with.
All right, Ashisha, thanks so much for taking us through that. We'll just have to see how the stock reacts of United Breweries in today's trading session. But with that, let's slip into a very short break on this edition of Market Cafe. We'll be right back with more stock-specific news and updates. You stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, let's switch focus back to earnings then. And it was a strong Q4 for PB Fintech. The online insurance aggregator turned adjusted EBITDA positive for the full year for the first time and saw the net profit as well in the fourth quarter against a loss last year. Gaurav is standing by with the earnings fine print. Gaurav?
Well, yes. Talking about PB Fintech, it actually reported strong set of numbers. So if you talk about revenues, it was up almost by 25% on a YOY basis. Net profit came in at 60 crore rupees, which is actually in losses of 9 crore rupees a year ago. And lastly, if you look at EBITDA also, that came in positive at 5.42 crore rupees versus the losses of 68 crores that we have seen in 4Q FY23. Apart from that, if you look at adjusted EBITDA, now that has reached to a new high levels despite elevated new business drag. And if you look at new core business premium, insurance premium, that was also up almost by 47%. Apart from that, if you look at some other business updates, if you look at the business premium overall, that was up 43%. Revenue was up almost by 25%, out of which core business contributed a growth of 33% on a YOY basis. And lastly, if you look at adjusted EBITDA, that came in at 6% versus what we had seen at 3% in a year ago. And out of which the core business EBITDA, adjusted EBITDA, came in at 17%, which was quite strong. If you look at some brokerages also now, they are also being very positive on the company, because if you look at Citi, now they have maintained buy rating but increased the target price to 1435 rupees versus what it was at 1150 rupees, because what they believe is that we have seen pickup in phygital portfolio of the company. Steady EBITDA margins are also seen in Paisa Low. And lastly, if you look at strong traction that has seen in POSP business with stable contribution margin. Apart from that, if you look at PB Fintech, Morgan Stanley has also now maintained equal rate rating with a target price of 1010 rupees per share, because they believe that disbursement growth was steady, weaker actually because of the tight liquidity supply. But out of these situations also, we have seen adjusted EBITDA reaching its new high levels. So all in all, brokerages are also seem to be very happy with the reports, and the company has definitely reported strong set of numbers. So definitely watching out on this counter to see how it performs in the days today.
Absolutely, Gaurav. We'll be keeping a very close eye on PB Fintech on the back of a good set of numbers coming in. But Gaurav, while you're with us this morning, also take us through other brokerage notes that we've been getting this morning and the stocks that are on their radar.
Well, yes, we have got other brokerage notes also where we have seen a healthy uptick in target price for the companies. So first, let's begin with JSW Energy, because now Jefferies, while maintaining buy rating, increased the target price to 690 rupees per share. What they believe is that profitability has improved for the company. If we look at 20 gigawatt project that they had in FY30, that can be advanced according to Jefferies. And lastly, now they are forecasting EPS growth of around 33% over the next 3 years to come up to a target price of 690 rupees per share. Next, let's talk about GAIL, because UBS now has increased the target price for GAIL to 250 rupees, which was earlier was set at 190 rupees per share. What they believe is that we can see actually some improvement in cycle and structural growth for the company. Apart from that, they have now increased the FY25 and FY26 EPS almost by 7 to 10%, and they believe that we may see near-term hurdles in terms of tariff, but we may also see 13% CAGR growth in EBITDA in terms of transmission EBITDA for the next 3 years to come up to a target price of 250 rupees per share. Next, let's talk about Navin Fluorine, because we saw strong set of numbers coming up in quarterly results for this company also, and now Jefferies has maintained hold rating and increased the target price to 3,070 rupees for the company. What they believe is that we have seen strong set of numbers in Q4. We may see CDMO volumes recovering in second half of FY25, and lastly, RevGas grows as R32 capacity can ramp up for the company, and on back of this now they have increased the target price to 3,070 rupees. So all in all, on the back of strong words that are coming in from brokerages, we will watch out for these companies and see how it performs.
Well, absolutely, and we'll keep an eye on all of those counters in trade today, but let's keep it going with brokerage notes then. And MK has maintained a sell rating on Jubilant FoodWorks. Vinny standing by with all of those key details from the brokerage note.
Absolutely. So we have one more brokerage note that's on Jubilant FoodWorks. MK is maintaining the sell rating, target price of 420 rupees per share. Now, obviously, what you're seeing is that what they believe, there are strong trends in the month of April, and confidence has been quite high between the customers on the street. So yes, they're positive on Jubilant Food. They are also highlighting that currently pizza trends, which had been a bit subdued versus burgers in the last whole year, pizza now seems like it's seeing a good growth in the pizza category. That's what Jubilant is highlighting. And they're furthermore saying, MK, that Domino's is doing better than Pizza Hut. So let's keep an eye out on that. Delivery waiver is what is there at the rupees 99 mail loyalty programs. These are something that will be the growth drivers in terms for revival for Jubilant Food. And lastly, faster expansion in new formats is something, a big potential upside that is there. So there is Hong's, Dunkin', Popeye, which was the latest one there. You know, expansion plans over there is something that will be potential, lead to a potential upside in terms of the growth for the company as well.
Oh, Vinny, thanks so much for taking us through that. Jubilant is where we'll be keeping a close eye on today. But also joining us now on the show is Ansh, who's here with the FNO snapshot and what the derivative outlook could look like for today. Ansh, good morning. We've been closing at levels lower, much lower than the GIFT Nifty has been indicating over the last couple of sessions. Tell us, what levels are you watching out for in today's trade?
That's right, Snehi. But let's start with India VIX first, because that has touched a 15-month high, and it has been advancing for 9 consecutive sessions, gaining 67% in these 9 sessions, indicating there are high possibility of getting volatility higher than the current volatility. Let's get back to Nifty now. If you can see in the chart, Nifty actually has been declining for 3rd consecutive session, and it has slipped below its key 20 DMA level. However, it has still managed to close slightly above that 50 DMA, which gives some positive hopes. So we may see some pullback, but index needs to go above that 20 DMA to have positive sentiment in the market. Now, if we talk about index options, we are seeing call writing happening at 22,400 strike, indicating traders expecting strong resistance around this level. Whereas on downside, we are seeing mild put buying happening at 22,300. Currently, we close around this level only, and traders are expecting Nifty to go below this level as well. Let's talk about Nifty Bank as well. So the index has actually slipped below 20 DMA, same like Nifty only. So we may see some support around 50 DMA, which comes to around 47,500, which is also a channel support. If we talk about index options, today we have Nifty Bank weekly expiry, so we may see some volatility in the market. On option front, we are seeing call writing happening at 48,500, indicating traders expecting resistance around this level, whereas on downside, we are seeing mild put buying happening at 48,000 psychological mark, indicating traders expecting expecting Nifty Bank to go around this level or to fall even below this level as well. Let's also talk about Reliance and HDFC Bank, because this both have very high weightage in Nifty, whereas HDFC Bank have high weightage in Nifty Bank. Starting with Reliance actually. So if you can see in the chart of Reliance, the stock has actually given a breakdown from double top chart pattern, and it has slipped below 100 DMA for the first time this year. This shows a very bearish sentiment in the market. The stock needs to come back about that 2,840 mark to gain positivity in the market. If we talk about HDFC Bank, the stock has actually slipped below 20 DMA after taking support on it from almost 13 sessions. So even this triggers bearish sentiment in the market, and the stock needs to come above the 20 DMA level, which is around 1520 level. Let's also see what FIS did in the previous session. In index future, they covered around 11,900 contract, almost 12,000, and they added around 17,700 contract. So net to net, we are seeing addition of around over 29,000 contract on downside, due to which the total FI long position has slipped lower from 45.5% to 41.8%. Lastly, let's have a quick view on a few stocks as well that will be in focus. And we are seeing short build-up happening in SRF, Voltas and Lupin, whereas long build-up for FMCG stocks like Marico, Godrej Consumer, Dabur and HUL. So keep an eye on the stocks.
Well, absolutely, Ansh. We'll definitely be keeping an eye on all of those counters, especially Voltas, on account of those 3 brokerage notes that have come out on the counter where brokerages have maintained their rating. But let's get a move on then and take a look at automakers. Hero MotoCorp and TVS Motor are set to report their Q4 earnings. Let's go across to Srishti to get all that the street is penciling in for both the companies. Well, Srishti, we've seen automakers hike prices this year, so safe to say that the street is going to be penciling in solid growth numbers for these as well.
Well, yes, 2 auto giants, Hero MotoCorp and TVS Motors, all set to report earnings. And this time, whenever we track the auto companies, the key to watch is the volume growth that the company has witnessed in the quarter gone by, as well as in the times ahead, how the margins of the companies are expected. That is something that we will be watching out for. When it comes to Hero MotoCorp, then this time we have seen a single-digit decline in the volume sequentially, but double-digit volume growth on a YOY basis, and that's exactly what we're going to be seeing on the numbers as well. A double-digit growth on a YOY numbers. Revenue expected a jump of 12%. EBITDA expected a jump of 21%. Margins expected to be intact at 14.1%. This number will be a key to watch out for, and the kind of a YOY push in the margins could be on the back of higher volumes as well as higher average selling price. And lastly, on the profit figure, 1,026 crores is what we are expecting for Hero MotoCorp. So do watch out for the margin figure of Hero MotoCorp and the commentary on the demand going ahead, especially the rural demand. We will be watching out for that. But when it comes to TVS Motors, interestingly, herein the volume of the company is actually quite good when it comes to the export markets, because the domestic volumes grew by 17% on a YOY basis in Q4, but the export have jumped 47% on a YOY basis, but that's on a low base. All in all, if we see, the revenue is expected to see a jump of 21%, 8,000 crores is the expectations, margins expected at 11.2%, and the profit expected at 528 crores. So all in all, we can say that the margins will be the key to watch out for, but for both the companies, we are expecting the margins to be flat on a quarter-on-quarter basis. So any deviation on that particular number will be a point that the stock can react to. Back to you. All right, well, Srishti, thanks so much for taking us through that. Hero MotoCorp and TVS Motor, that's the outlook largely that the street has. And Hero Motor also being a nifty company, we'll be closely watching out for those numbers as well. But another nifty company that's coming out with its quarter 4 numbers today is L&T. An uptick in revenue and profit is in store, while order inflows are likely to moderate. My colleague Anisha Jain is joining in with what we can expect from the numbers. Anisha.
Well, the second half of the year is seasonally stronger for L&T, and that's why we are expecting that it's going to close the year on an optimistic note. Overall, with respect to revenue, we are expecting a growth of 13% on a year-on-year basis. Margins, however, might be a bit under pressure, so it might be just around that 10.8 to 11% mark as compared to 12% that we had seen last year. And the profitability is expected to jump up by 7%, so that the number comes closer to 4,300 odd crores. In terms of the order inflows, there might be a bit of a weakness this quarter, because remember, just ahead of elections, the ordering slows down, and that is something that might have an impact. Overall, the expectation is that the order inflow should be anywhere between
75 to 80,000 crores. In fact, the order book is also something which is expected to be between 4.5 to 4.75 lakh crore rupees for the company. In terms of the other internals, services segment and energy segment has been doing well for the company, and that's something which is expected to play out this time around as well. Of course, with respect to the prospect going forward, the management's commentary on order inflow, the Middle East ordering, the private sector ordering, the working capital situation, all of this will be keenly watched out for. In terms of the earlier guidance, they had talked about overall order inflow guidance of 20% plus, which more or less they will deliver, plus the revenue was expected to be in high teens, again something that the company should manage to deliver. For next year, however, the expectation for order inflow is a bit muted. As I pointed out, the base is high, plus election effect will come into picture. That's why order inflows might be flat to a decline of 5% in FY25. Revenue growth, again, the teen level of 12 to 15% might be maintained, with a margin expansion of 50 to 100 basis points is something the street is watching out for. So overall, a decent set is expected from L&T this time around.
All right, Anisha, so we'll definitely be keeping an eye on L&T, and there you have it. Those were the expectations. But with that, we're timed out on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehi Shah, as well as the entire team that put this show together, thank you so much for tuning in. You don't go anywhere because the market takes all of the action forward.